Hello, Wolfpack. I'm back from my trip. It was all good. Everything went well. Came back a little bit early for various personal reasons. But we're back here in the market today. And I'll be honest with you, I haven't had a massive amount of time to look into the market over the past, I think 4 days, 3 days. And so it's a little bit fresh to me, but I've done a little bit of a quick analysis before this video. And my conclusion is kind of interesting. It's taking a little bit of a turn from my usual point of view. But generally speaking, I don't see any evidence at the moment that would make me immediately change my 200-week SMA prediction. So just to kind of catch people up, I'll just bring up a chart here and just show you what I'm kind of expecting for Bitcoin. Now, ignore this fractal for a second. That's a different thing to speak about. But I am expecting for Bitcoin, I don't have any reason to believe at this moment in time, any concrete reason to believe that we're not going to be doing this. I am expecting Bitcoin to trend downwards towards the 200-week SMA, and I think we're going to reach that region before November. Okay, that's been my prediction for a while. I'm going to stick by that, especially going into March with the interest rates decision coming up, which has been made a bit more interesting by Russia declaring war or invading Ukraine, and that puts a bit more pressure on the United States there because they need to have a bit of a bit of flexibility in terms of spending, and raising interest rates is not necessarily the best move when you go into a period of time where you could be spending a lot of money as a government, right? So a little bit of debate right now as to whether they're actually going to go through and raise those interest rates. And obviously, as we know, and as most people would know at least, if they do raise interest rates, we could see a massive traditional market correction, which will lead to an even bigger Bitcoin correction or a cryptocurrency correction. If they keep interest rates the same, we could continue going upwards here in the traditional markets, and Bitcoin could do quite fine. But generally speaking, a lot of people would agree that we're probably going to raise those interest rates. And it's something we have to wait for, right? It's only about two weeks, just over 2 weeks away now, almost 3 weeks away. And so, look, let's just wait and see what happens. We've waited like months for it already. We may as well finish it off. And with Bitcoin this low, we're at 39k currently. There's not really any reason to jump right back into the market right now. I mean, first and foremost, we've had this ascending wedge structure, broken that to the downside. I'm actually happy to take that away for the time being. That structure is well and truly gone. We'll leave this pink line here, right, because that is a clear uptrending resistance line, and we'll actually make that a blue dotted line. Now, that might come in handy in the future if we get that high again. That might be an interesting line to look at in terms of upcoming resistance. Now, I still stand by the fact that I think that we need to be closing a weekly candle above the 50-week SMA before we get back into the market. Currently, the 50-week SMA is at 47k. All right, so previously I've said 48k. Okay, I'm saying the 50-week SMA. Currently, that's at 47k. So closing above 47k will give us the confidence to jump back into the market. Until that point, it's very, very risky. Looking at bull market support, we can see by the time we get there, they'll be in the same region as well. And then we're looking at things like Gaussian channel, Ikomoku, same thing, right? So above 47k, we look good. The POC on the volume profile is actually currently at 47k as well. So everything's kind of lining up, and this isn't a coincidence. This is actually how the markets work. So they show you very clearly what the safe entry point is 90% of the time, right? It's only a very small percentage of the time where you have to actually, really get into it and try and find out where a safe entry point is. But Bitcoin is very clear right now, right? The safe entry point for Bitcoin is a weekly close above the 50-week SMA. That would be a safe entry for Bitcoin. And, looking at the actual numbers behind that, well, if you're not getting into the market right now, that's only a 20% gain away. If you're happy to wait 20% for, basically a certainty of at least a 50% gain, then, that's what I'd be doing. And obviously buying right now is still incredibly risky because we're below resistance. And not only are we below resistance, right? But we are below quite clearly here, this downtrending dotted line, this downtrending dotted blue line. We've actually come up on a recent candle, and we've very clearly wicked off that line. And we've very clearly at the same time also wicked off the red 50-day SMA. So that's a clear rejection there. And then on top of that, we've also rejected off this red resistance box, okay, and that's between around 40k to around 43k. So we've had lots of rejections in the last few days, and just because we have some sort of like almost W formation here, it doesn't mean Bitcoin's just going to pump up. That's not a valid reason. I mean, looking at the macro, I think it's very clear that there isn't much valid reason for Bitcoin to be having a massive rally right now. You can take speculative reasons like, well, seeing what happened, for example, to the Russian currency and the Ukrainian currencies. They're going down massively, and that just goes to show how fragile the fiat system is. And that's a reason. Let's buy Bitcoin now. You could say things like that, but the point is, that's not what the global consensus is. Otherwise, we'd be at 40k right now, or we'd be at 50k. The point is, Bitcoin is a high risk asset, high volatility, and high volatility assets are the first assets to get sold off when there is a bear market in traditional markets. Okay, and there is still a very strong chance we could be seeing that bear market in traditional markets. So right now, well, first and foremost, I'm not actually seeing any reason on the short-term TA to be bullish because we haven't even broken above the first layer of resistance yet, and that stands at around 40k. All right, and that's this blue dotted line and this 50-day SMA. That's literally the first step. We haven't even got above the first step yet, so seriously, no reason to be bullish there at all. And then the second reason is what I just told you about the macro. So, what is the optimistic kind of viewpoint? Well, there is some optimistic views to be had, and one of which being is the fact that we might be seeing a bullish MACD cross to support this move if we manage to get above that region, right? This blue dotted line. The only problem is that actually requires us to get above it first. Okay, so it's not really a very compelling argument. But the other optimistic chart we'd be looking at would be the fact that, well, we have a very, very clear fractal torn directly from 2018 in the bear market period in 2018 in the dead cat bounce period. And this has been playing out very perfectly. I mean, we've spoken about this many times on the channel, and a lot of people are convinced that I've stolen this fractal, which is just ridiculous if you look at when I've actually come up with this fractal from December. And second of all, you can't steal a fractal. It's a public chart. Anyone in the world can look at it. I'm not saying I'm the first to bring it up, right? There's probably millions of people who know about it. So just ridiculous comments there, but this is a fractal that's been very clearly playing out since September. Very, very, very perfect, very, very, very precise to the T. You can zoom in on each of these things here. It's actually just stunning. I've never seen a fractal this accurate. And this fractal that has been very accurate for months now suggests we pump up. And not only do we pump up to 56k. Okay, take that with a grain of salt. I would say 48k is where this fractal is actually targeting, or 47k, sorry, because that's where the 50-week SMA is, and that's where we retested here on this fractal. So 48k this fractal is essentially targeting, or 47k. But even this fractal should be taken with a grain of salt because fractals are basically historically the least accurate ways to measure price action in any financial market. The least accurate ways. Just above gambling. And so, they're indicators, they're good supporting evidence, but they're not something to put your whole life savings behind because market conditions are very much different to what they were in 2018. I wouldn't take this too seriously. It is worth considering, and that's why we're being prepared for all the options. Now, do I really care if Bitcoin comes up to 47k like the fractal suggests? No, not at all, because I want to get above 47k. I don't care if it goes to 47k. We want to get above. We want to close above 47k. Not only that, but we want to be doing that after the interest rates decision. Because if we close above 47k next week, well, the week after that, we're having a massive, massive interest rates decision that's going to basically, direct the next movements of the traditional markets and hence the movements of cryptocurrency markets. So, at the end of the day, I'm really waiting for March the 15th here. That is the critical date. That's when the decision is going to be made. It's going to be made whether it goes up or not and how much it goes up. And then we can see the effects that has on the traditional markets, and then we can make evaluated decisions. But as of right now, even just looking at the TA, taking aside all of the macro, all of the terrible macro news, 47k is where we need to get above. We're still 20% away from that region, and we still haven't even broken through preliminary resistance yet. So nothing really to be getting too hyped about here on Bitcoin. Now, the S&P 500 and the DJI, surprisingly, have actually pumped upon the news of Russia's invasion of Ukraine. And the reason being, in my personal opinion, is, obviously we have, generally speaking, a lot of people who would know a lot about the traditional markets is we do see some sort of rally after big events like this, declaration of war, etc. But in this case, I would say the main reason would be the fact that, now there is speculation as to whether those interest rates will be raised or not. We had basically concerns of interest rates being raised starting here. Markets started to correct. People started to sell out of the market, kind of predicting that news to come along. Because if the interest rates go up, it's very bad for traditional markets, right? It fights inflation, but it's bad for economic growth here, and hence bad for the companies, right? And so people sell off their stocks. But now, as we've had a bit of speculation come into as to whether those interest rates are actually going to be raised or not, and also dipping into technical analysis support, we can see that the market is pumping a little bit here, a little bit of relief as the pricing in of the interest rates rise kind of reverses a little bit here, which means that if they do rise, the dump actually could be a lot more significant. So it's not a reason to be bullish or bearish. It's just something to keep in mind here. And it's something we really can't make an educated decision on yet. And the DJI is the same thing. Now, looking at the DXY, okay, and this is basically a chart that measures the strength of the US dollar in relation to other global currencies. This thing is in a massive ascending wedge structure, which is a bearish structure and means it's probably going to be breaking down. The only problem is, and the only thing is, TA doesn't necessarily work too well on a thing like this. And so when we look at macro and we look at the interest rates potentially being risen and most likely being risen, we can actually assume that this is actually going to break upwards. And if this goes upwards, Bitcoin's going to go downwards because this thing is extremely reverse correlated to Bitcoin. And so I'm bullish on DXY at this point. And again, that's one of those things we just have to be waiting and seeing with interest rates in March 15th. So at the end of the day, guys, I'm just coming back on, logging back on here after a few days away, making this video just to inform you guys of what's going on here. Really not too much has changed. I know it seems like a lot's been going on with Russia and Ukraine. It seems like everything's happening here, but in terms of TA, still looks bearish. In terms of macro, still looks bearish, or at least it looks as though we need to be waiting to see what happens. And that's my views on Bitcoin right now. I'm sticking by my original stuff. 47K is the critical region. Close the weekly candle above that, we can consider the bullish argument once again. But as of right now, as of this point, all I'm seeing is a double top here. Right, all I'm seeing is a double top coming down, seeing some relief and a potential rejection. That's all I'm seeing here on Bitcoin. I'm not seeing this mad bullishness that a lot of people would kind of say it has. So let's see what happens at the end of the day. 47K is what we're looking at. Thanks for watching, guys. Hope you enjoyed. And it's good to be back here on Wolves of Crypto. I'll catch you all with potentially a live stream tomorrow or at least a video. Catch you in the next one. Thanks.